You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-Mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-Mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Friday, 17th day of May, 2024. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. First live broadcast is our live training room, and that's reserved for members only and those who are taking their 1-week free trial. If you have not taken your 1-week free trial, go to mytradingiq.com. At the top of the page, there's a link that says 5-day free trial. No credit card required. Just click the link, fill out the registration form, hit submit, and in most cases, same day, we'll get your desktop set up, get your indicators indicating, and then your trial will start following trading day, which means if you do it today on a Friday, Saturday and Sunday won't count against you. Give you a couple days to get accustomed to the indicators. Then your trial will run for 5 consecutive days next week, Monday through Friday. Now, a word of note, it doesn't matter what day of the week, weekend, or hour of the day that you sign up for the trial. You will get 5 consecutive trading days, even if it stretches over a weekend. Okay. Now, when the live training room ends at 11:30 a.m. Eastern, we take a 30-minute break, and then we come back for the afternoon broadcast. That would be this broadcast, which begins each day at 12 noon Eastern. There are a couple of different ways to join the afternoon broadcast live. Best way, because you only have to do it once. Go to mytradingiq.com, scroll down the page to where it says Afternoon Broadcast. Click that link, fill out that 30-second registration form, and you're done. What will happen going forward is every trading day, you'll get an email about an hour before this broadcast starts. Now, in that email, there is a link. So, at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. Now, the benefit there is you will have access to the question box, so you can ask questions and participate in the discussion. Of course, there will be days when you're out of the office, away from the desktop, but you still want to join live. And there will be days when you're busy, you can't join live, but you do want to get caught up later. You can do both of those by using our YouTube channel, which is easy to remember. youtube.com/CFRN. It's easy to remember because you already know the YouTube part. So all you got to remember is CFRN. Not only do we broadcast live every trading day, as we're doing right now on our YouTube channel, but we also archive each and every daily broadcast. Currently, there are over 2,500 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it is a great way to get to know who we really are. Not just today, not just this week, but thanks to the power of YouTube, you can see how we've evolved over the years. You can scroll back 6 weeks, 6 months, 6 years, even more. Just pick some days at random. Watch a little bit, fast forward a little bit, watch some more, jump to another day, and another day. You get the idea. Obviously, you're not going to watch them all, nor do you need to. But it'll give you, like I said, a good idea of how we've evolved over the years. youtube.com/CFRN. Let's open with our daily devotional and a word of prayer, as we do every day. Then we'll get into the markets, and then about 12:45, 12:50, Michael will join us, give us a recap of what happened this morning in the live training room. Then we'll go live on the TradingView platform for 30 minutes, and then I'll wrap things up with our good word for the day. Now, the topic of our devotion this week and into next week: faith works. It's basically a study on the book of James. Now, our scripture today is James 2, verses 1 through 13. And I'm going to share with you from the Message translation. My dear friends, don't let public opinion influence how you live out our glorious Christ-originated faith. If a man enters your church wearing an expensive suit and a street person wearing rags comes in right after him, and you say to the man in the suit, "Sit here, sir. This is the best seat in the house," and either ignore the street person or say, "Hey, would you mind sitting back here in the back row?" Haven't you segregated God's children and proved that you are judges who can't be trusted? Listen, dear friends, isn't it clear by now that God operates quite differently? He chose the world's down and out as the kingdom's first citizens, with full rights and privileges. The kingdom is promised to anyone who loves God. And here you are abusing these same citizens. Isn't it the high and mighty who exploit you, who use the courts to rob you blind? Aren't they the ones who scorn the new name Christian used in your baptisms? You do well when you complete the royal rule of the Scriptures. Love others as you love yourself. But if you play up to these so-called important people, you go against the rule and stand convicted by it. You can't pick and choose in these things, specializing in keeping one or two things in God's law and ignoring others. The same God who said, "Don't commit adultery," also said, "Don't murder." If you don't commit adultery, but go ahead and murder, do you think your non-adultery will cancel out your murder? No. You're a murderer, period. Talk and act like a person expecting to be judged by the rule that sets us free. For if you refuse to act kindly, you can hardly expect to be treated kindly. Kind mercy wins over harsh judgment every time. Once again, that was James 2, verses 1 through 13 from the Message translation. Now, today's text stands in stark contrast to caring for widows and orphans. Instead, the stain of worldliness was polluting the church with favoritism for the rich. Simply put, they weren't putting the teachings of Jesus into practice. James confronts our sin head on. We sin when we show partiality to some people over others, whether they're rich, poor, or different in another way. Believers should extend mercy rather than harsh judgment to others. Faith without mercy toward others is not genuine faith. Familial language is key in James' letter to the dispersed church. For followers of Jesus, true faith is personal, but it is also communal. The church is the family of God. We saw previously that when addressing the nature of temptation, James referred to God as the Father of lights. That was in James 1:17. When describing religion that is pure and undefiled, James again referred to God as Father in verse 27. Notice that religion that pleases the Father is caring for widows and orphans, women and children without families. In these verses, James turned his attention to another marginalized group, the poor. Almost every time a practical point of application is addressed, James used a key phrase to draw attention to what he was about to say, pleading in love with his fellow church members. Christ paid the ultimate price for his church. When we make petty judgments of others in the church based on what they wear or how much money they're able to contribute, church becomes indistinguishable from the world. We don't enter the church based on merit. Jesus paid the same price for every person in his church. The same gospel unites us with brothers and sisters in Christ. His blood bought our freedom from sin and made us sons and daughters of the Father light. Join me in a word of prayer. Heavenly Father, we come before you with humble hearts, thankful that you show no favoritism. Help us to love and honor all people, regardless of their status or appearance, as you have called us to love our neighbors as ourselves. Grant us the wisdom to treat everyone with the same kindness and respect that we would want for ourselves. May our faith be reflected in our actions, demonstrating your love and mercy to those around us. Help us to live out our faith through deeds, showing the world that our faith is alive and active, and let it bring glory to your name. It's in Jesus' name we believe and pray. And everybody said, amen. Amen. And happy Friday. Let me give you the numbers from around the world. Start here in the US with the cash markets, or the indices as they're called. Currently the Dow's up 22 points. The NASDAQ is down 6. S&P 500 is down 1. And the Russell 2000 is up 1. More of that thin sideways trade. We got a little bump midweek off the CPI number, and it carried over somewhat into yesterday, a little bit. Now we're back to flat and sideways. In the commodity basket, crude oil is up 29 cents, trading 79.52 last. Gold is up $31.30, trading 24.1680 last. That's a gain of over 1.25%. But the real star of the day is silver, up $1.10, trading 30.98 last. That's a gain of over 3.5%. And a reminder, when the price of gold moves $1, that's worth $100 per contract traded. When the price of silver moves $1, that's worth $5,000 per contract traded. And again, silver is up on the session $1.07, a little over 3.5%. In the Asian markets at the close, the Nikkei fell 132 points. Shanghai rose 31, and for the Shanghai, that's a gain of 1%. The Hang Seng gained 177 points, which is almost 1%. And in the European markets, at the close, FTSE dropped 18, the DAX fell 34, the CAC down 20. So we had a mixed day in Asia. It was a red day for the UK. And so far, it's a mixed Radio Friday here in the US of A. We got two of the major indices barely in the green. 26 points for the Dow, a little over a point for the Russell. The NQ and the S&P are just barely in the red. So all in all, as you could call it, a flat line. Okay, let's go. Let's go here first. Gold's record-setting rally may have captured the headlines this year, but it's silver that's running harder and faster as the less glamorous metal benefits from robust financial and industrial demand. Silver has soared by more than a quarter this year, outpacing gold and making it one of the year's best performing major commodities. Yet in relative terms, silver is still cheap. It currently takes about 80 ounces of silver to buy 1 ounce of gold, compared with the 20-year average of 68. Spot silver rose as much as 3.3% today. The two metals move largely in tandem, as both offer similar macro and currency hedging properties. With gold hitting a record on central bank buying, retail interest in China, and a resurgence in bets lower U.S. interest rates are on the way, silver's gone along for the ride. Although there's been scant interest from investors in silver-backed exchange-traded funds, physical sales have picked up. Even clients who are interested in buying gold are starting to say, well, maybe I'll buy silver first and wait for the ratio to sort of rebalance. Between April 1st and 25th, Singapore-based dealer Silver Bullion PTE sold 74 ounces of physical silver for each ounce of gold, compared with an average of 44 in 2023. The white metal has already been making headway against its dear cousin in relative terms. Back in January, the gold-silver ratio was above 90, the most stretched since September of 2022. Citigroup reckons that if the Federal Reserve proceeds with interest rate cuts and economic growth stays strong in the second half, the ratio could move to around 70, although it cautioned that a slowdown would push it the other way. Silver has a dual character, valued for both its uses as a financial asset and an industrial input, including clean energy technologies. The metal is a key ingredient in solar panels, and with robust growth in that industry, usage of the metal is expected to reach a record this year, according to the Silver Institute. As I've told you before, the majority of gold ever mined in the history of man still exists in one form or another, whether it's in bullion or a coin or a pair of earrings or a wedding ring. It still exists. Not true for silver, though, because silver actually gets used up, burned up in various types of industrial technology. And remember, we have a finite supply. When God created the heavens and the earth, He created so much gold and so much silver and sewed it up in the belly of the earth. Now, there may still be more discoveries yet to be made, but there hasn't been a lot of money put into exploration over the last few years. So as gold and silver do start to run, then the junior miners will start their exploration, but they're always running a few years behind. From the time you find a mine and get it into production, it takes about 7 years. So I've been bullish on silver for a very long time, and I remain bullish. Nice to see it back over $30. GameStop, on the other hand, fell as much as 30% this morning after the company filed to sell 45 million new shares of common stock and released preliminary financial results that revealed sales fell sharply from the year prior in its most recent quarter. Video game operator said it expects sales to be in the range of 872 million to 892 million in its fiscal first quarter, down from 1.24 billion in the same period the year prior. Wall Street had expected a revenue of just over $1 billion for the quarter, according to Bloomberg. With Friday's decline, the stock is now below where it opened Monday morning after the reemergence of Keith Gill, also known as Roaring Kitty, on Twitter. Gill's bull case for GameStop ignited the meme stock rally back in 2021, and the stock more than doubled this week by Tuesday morning. Wedbush Managing Director Michael Pachter told Yahoo Finance, "I'm not seeing anything in the pre-announcement that tells me that the business is turning around. But at least they'll raise enough cash to let them last another 3 or 4 years if they, in fact, continue to fail and try to find a new strategy. This company has to find some way to pivot. With broadband internet and gigabit speeds, the reasoning for somebody to walk into a physical retail location and buy a video game, a physical video game, well, you only have to look at what happened in the video industry. Remember Blockbuster? Yeah, that was the big dog on Wall Street for a long time. And then came Netflix. Now, Netflix didn't start out as a streaming service, but you could go online, you could order a video, it would show up the next day or 2 days later in your mailbox, and when you were done, you just put it back in your mailbox, and off it went. Then came the streaming service. And that's pretty much the same place we are today, comparing the video world to the gaming world. So I think GameStop may have seen its last run up again, unless they can find some way to pivot and find greater profitability. All right. Logic 247. This has been our toughest week in a long time. Might be the second toughest week in 302 weeks. Now, this is valid through 6:30 a.m. Eastern this morning. Since the markets opened Sunday night at 6 p.m. Eastern, we've issued a total of 38 alerts. At the time Valerie did the recap, we were still waiting on the outcome of 6. It gave us 32 actionable alerts, of which 9, or 28%, would have been stopped out based on market structure and a very simple process we teach all of our passport holders in their one-on-one mentoring sessions. Now, over the last 302 weeks, what we've averaged on a weekly basis is 20% or less of the alerts being stopped out, again, based on market structure, and that very simple process we teach all of our passport holders. I think last week we ended up at 8% stopped out. I think the week before was 10% stopped out. Some very low numbers. But the average over 302 weeks and over 16,700 alerts is 20% or less. So, still not a bad week. Not a banner week, but I can certainly live with that. On the concierge trade alerts, that was our original alert service long before we rolled out Logic 247 over 300 weeks ago. Now the CTAs are different. They don't come out around the clock 24/7. Futures trade around the clock, and we have traders around the globe. So their day session is our night session and vice versa. So a logic alert can come out at 2 a.m. or 2 p.m. Now the logic alert has an entry price, an initial target designed to help you get your goal for the day, and then often a second, a third, a fourth, or fifth target, and a final trade to target. This is where you cut your teeth as you learn how to read a chart and understand what price is telling you and how to spot windows of opportunity. The purpose of the alerts is not for you to just trade them, so you don't have to worry about learning how to trade. Although some people will make that mistake, please don't. Use them in the manner that they're intended to help you learn how to trade. If your goal is to trade for a living, that's never going to happen as long as you're depending on someone else to tell you when to get in and when to get out. Gotta learn to read the chart yourself. So you start with the logic alerts, where I look left for you to spot potential obstacles. And then you graduate to the CTAs, where you look left yourself to spot those potential obstacles. When the report comes out each evening, right after the Globex Open, so the Friday session began Thursday night at 6 p.m. Eastern here in the U.S. 5 minutes into the Open, all of our members and trial members got these targets. First thing you do when the report comes out, make a note on the 30-minute chart of whatever markets you trade where price is at this time. It'll always be between these two numbers. Then draw a line in the sand at the long target, a line in the sand at the short target. If price gets above the 30-minute BBC, it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. That part's pretty simple. BBC just stands for bull-bear cross. The indicator is the green line you see on my charts, no matter what time frame I'm showing. If price crosses above the green line, then I'm bullish and anticipate higher prices relative to whatever time frame I'm looking at. If price crosses below the green line, I'm bearish and anticipate lower prices relative to whatever time frame I'm looking. But for the alerts, it's always the 30-minute chart. With CTAs, you learn to look left yourself to spot the potential obstacles, and you learn how price behaves at a weekly trading zone. That's important because price is always trying to reach a weekly trading zone. From the moment the markets open Sunday night till they close Friday afternoon, if price is above the 30-minute BBC, it's trying to get to the weekly zone above. If price is below the 30-minute BBC, it's trying to get to the zone below. We've published the zones since December 14th of 2009, closing in on 15 years. They come out every Monday morning for our members and trial members at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They do not change in any way whatsoever. You simply have to resist the urge to make it more complicated than that. As long as you know which way the wind is blowing, it's pretty simple. Reach your goal for the day. So, here's the daily chart. I'm going to put you on hold for 1 second. All right, daily chart. Yesterday, we put in a new all-time historic high at 53.49. This was the all-time historic high that we put in back on April 1st at 53.33.50. Then on the 15th, we hit 37.25. And yesterday, we had 53.49. And yes, that is Friday's candle right there, that itty bitty candle. Now you've got support here, and then support at the BBC and at this low. Always look at the daily chart of whatever market you're going to trade, whether it's futures, stocks, crypto, Forex, ETFs, because institutional traders look at daily, weekly, and monthly charts. The way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts has to do with account size. They trade in size that actually moves price. So by looking over the shoulder of those who move price, most days that can be very beneficial, as you can easily see which direction the institutional traders are trading. Right now, they're just treading water. Here's the 30-minute chart. Again, this is where all alerts are created, logic and the concierge. Vertical line separates today, Friday, Thursday, back here to Wednesday. When price drops to a weekly zone, we expect support until proven otherwise. When price rallies up to a zone, we expect resistance until proven otherwise. This is the highest weekly trading zone for the week. Yesterday, as we got above, we traded all of yesterday above the highest weekly zone, but, and this is historical, almost 15 years, I closed the business on Friday. We expect to be below the highest weekly zone or above the lowest weekly zone. And that looks like the picture that's getting painted right now, because we're below the BBC. We got red and falling overhead. We broke through that double bottom that we had. Now we just got to punch through it. We'll hit the short target. And once we take out that short target, then we've got a pretty clear ride down to about 52. That will be conservative, 52.92. And then the zone below at 52.80/81. On the Dow, here's where we opened last night, and we've just done nothing but go sideways. On the Russell, pretty much the same story. We opened just below the zone, and that's not the highest zone. The highest zone's up here, but just sideways. We've come up to the zone a number of times, and each time we're met with resistance. Price is now below the BBC. If blue and climbing turns to red and falling, expect a revisit to the short target and possibly below. In Q, same sideways story. We opened at the zone and just traded along the zone most of the session. Got this one drop here at 4 a.m. Eastern. Took us almost to the short target. You only need 5 points. And this candle dropped. It opened at 47. And it dropped 40 points. This candle dropped 40 points at $20 a point. You only need 5 points to get your goal for them. So you could have got it there, or you could have got it here. When price got above the BBC, you had blue and climbing. This one candle opened at 675 and ran up to 686. It's 11 points. Again, you only need 5. Now we're back below the highest weekly zone. We got red and falling overhead. We're below the BBC, and we just bounced off the short target. Support. When the market finds support, it will go look for resistance. When the market finds resistance, it will go look for support. Across all markets, all time frames. Here's where gold opened last night. It ran up to the zone, which again we expect to be resistance until proven otherwise. Price always reverts to the mean. In our case, the mean is green. It's called the BBC, bull bear cross. Bullish above it, bearish below it. So above it, we're bullish, and it made it right to the target. Pretty much to the tick. Exactly to the tick, 79.65. That was the high of that candle. And we pulled back to the BBC. We attempted a down move, but we ran into these lows that were created yesterday afternoon, right here, just above the bullish cross. Whenever you have a bullish cross that leads to an extended move, the first time price revisits that area will almost always be good support. Buyers came in a little bit early, pushed us back up to the long target again, and right now we're consolidating at the zone 79.50/5. And over the weekend, starting Sunday night, crude oil will go to the N contract, July. Gold opened here below the BBC. We dropped almost to this low from yesterday afternoon. Buyers came in and took us right up to the long target. Market found resistance where the bearish cross happened yesterday. No surprise, almost always happens. Not every time, but certainly more often than not. That resistance sent us back to support at the BBC. The pullback held, and that took us all the way up to the high of the session. We look left, find out why. And right here, got the black line crossing blue and climbing. What does that tell us? That price is most likely going to drop to the BBC. Now the pullback holds more often than not, whether it's pulling from below or above. So price makes this drop. Be prepared for a potential bounce. If for some reason it should fail, make sure you let price get down to about 23.95, and then you can short it $400 all the way down to this low at 23.91. I guess Michael is here.
Yeah. I'm sorry. Did I actually take the screens? I was gonna say, oh crap.
No,
I didn't mean to do that. I meant to change my name. All right.
I'll finish up when you're done.
I'm sorry.
No, it's okay.
I'm sorry. I was trying to change my name. That's what I meant to do, and I accidentally took the screens.
No. Go ahead.
Wait a second. Something's not right. Okay, so it's saying that right now, and now I go here, sharing. Uh-oh.
Got to change presenter.
Yeah, I know, but it's acting really weird the way it's doing it. Okay, so now I'll change presenter to me, and this was working better. Okay, that's better.
All right, looks good.
All right, sorry about that.
No problem.
That was rude. I really did not mean to do that. Okay, here we go. Good afternoon, everyone. Today is Friday, the 17th day of May, 2024. If you have not taken a free trial with us, then go here to mytradingiq.com and click on this purple button right here. Now, that is just what I was going to do a second ago. I was trying to find out. All I have to hit is publish, but I have to find the thing. When you do that, you're going to be sent to a registration page that will look, no, it'll look, well, Once I find the publish button, I'll show you. But we sent through a registration page where all we ask for is your name, your email, and your phone number. Down at the bottom of the registration page, you can give us your NinjaTrader machine ID if you have NinjaTrader, or you can give us your TradingView login ID if you have TradingView. All right, either one of those, and we'll be able to get you your indicators indicating. You want to do that at the beginning of your trial, if you can. Do it at the beginning of your trial, and then here it is right over here. See publish, and then it will publish. All right, I know you guys are seeing all this. I'll slide it over here. That's all you have to do. All right, is give us that information. Once you give us that information, we will be able to enable you and get your indicators going for you on your desktop. All right, and it is complete. So now I can actually show you that. Refresh this page. Page refreshed. Here it comes. There it is right there. All right, I knew I had it all set, ready to go. So all you have to do is give us your name, your email, your phone number. Down here at the bottom, if you have NinjaTrader, give us the machine ID. If you have trading, give us the login ID. That's all you have to do. Okay, when you do that part, we'll be able to enable the indicators for you and get you going. All right, so here we go. In the spreadsheet, if you are going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Okay, all the CFTC risk disclosures down at the bottom. Let's see. Today, on the NQ, we made 80 ticks. On the Russell, we lost 10, and on the YM, we made 29. That put us at 495 in the morning session. Today, it took 9 minutes and 3 trades to get to $2,550. Now, those 2550s, you can tell that those are 30-tick trades on the NQ. The 2550s, that's why it happens so often in a month, that number. It's a 30-tick trade on the NQ. That's where we got our goal for the day. Took a total of 15 trades this morning. So on the month now, we're at $4,607. That's over 354 days. That's over 13 business days, averaging $354. On the year now, we're at $38,342, averaging $407 on the year. Now, a couple good things happened today. Well, we got the goal for the day early on, and if you started the 24/20 plan this year, you are now at over $1,100 an hour. Adding one contract per month, including me, you get the goal for the day. If you started with me at the beginning of last year, you are now over $6,000 an hour, $6,019 an hour. Quitting when you get the goal for the day, trading 17 contracts. All right, pretty good money if you can get it. Now, we'll get into the actual trades now, okay? I've shown you how to take the free trial. You go here, click on the purple button. The purple button is going to bring you to this registration page. Fill out that page, and that's it. All right, so the markets that we didn't trade today, we didn't trade the ES at all, but we did get some work done here on the YM. And I'm kind of anxious to go back and look at the bonds, the 10-year bonds that we were talking about this morning. We'll do that in a few minutes. It's going to get down to 109.8, I think, or something like that. That's what we're looking at. Anyway, on the YM. Now, did I close that DOM again? I wonder if I close that DOM again. Let me see. No, I think I have it open over here. I do have it open. Okay. And we did get down to that number just a few minutes ago. Anyway, on the YM, we had a shorting opportunity right here at a break even. And the next trade we took was right here. We got 4 ticks in profit on that one. Next one was over here. We got 10 ticks in profit on that one. Now, I was prognosticating using price action this morning, saying that this is where I was thinking price was going to get down to. I don't know if it did ever get down there. Not yet. Hey, it's just hugging the weekly trading zone. The ES is hugging the weekly trading zone too. So we had a plus 10 on that one. The next one here was this right here, the purple and blue. That is probably our super highest probability trade if you get those two together, because it's a blue arrow, which is our highest probability trade, coupled with the outer band being the right color. Okay, that's what's going to be the purple arrow on top of it. And on that one, we picked up 10 ticks right there. Okay, the next trade that we took was over here. We picked up 5 ticks to get us to 29. During the break, it looks like there was a blue arrow here that we went to break even, blue arrow here that had profit, and a blue arrow here that would have stopped out. Did I just say how high a probability that is, and you get one that stops out right there, and another one right over here. Odd. Anyway, This is a 7 range. I just want to make sure because I was messing around last night with 4 ranges and all those other things, and even this morning. The thing that I was looking at on the soybeans this morning, and not soybeans, but the bonds, we're looking at ZN 10-year notes, we're looking at the front contract, and we're looking at a 3 range this morning. And when we were looking at it, when it populates, well, I'm going to have to redo the whole thing anyway. We'll do this. 2. Okay, and when it populates, you'll see it gave some really good signals this morning. This is when we were looking at it this morning, as this bar was closing. This bar was actually populating. And when we're looking at it, we're looking at the DOM. All the stuff that I've always shown you and I teach you every week in the DOM, the number for it to get to was right here, 109.08, when it was up here at 109.11.5. It was up here. Now, this is the end. It's like 15 something a tick, I think. 1560 a tick or something like that. So that's a pretty good chunk right there. And the reason we're saying that is because we read it in the DOM. The DOM was given a clear indication that it was going to go down to this number right here at the time. If you don't know what I'm talking about, take the free trial. Okay, take the free trial, and that's in Thursday's lesson plan of the free trial. Okay. Now let's get back here. This was, what market was this one? I think it was ZS, right? Oh, that was a Russell. Okay, well, let's get back to the Russell then. On the Russell, RTY, go back to the 7 range, and we'll fix our sensitivity back the way that it was. There. Okay, so on the Russell this morning, that is all that you have to do to go back and forth between symbols. Just change the symbol, change the sensitivity. That's all you have to do to go back and forth between symbols. See how simple that is? All right, so on the Russell, we didn't have a lot going on today. We just had a couple of trades, and we had this one right here that stopped us out, minus 10 ticks, and we had a break even right here. And that was it. So during the break, it doesn't look like the Russell gave anything up. It didn't give anything up. You do have all the arrows on this, I think. Just make sure we have all the arrows showing on this. Yep, we sure do. Just not seeing any of the blue ones or the purples. But that's what the Russell was like today. Okay, yes, we didn't trade it all, but see, it's just like no trade zone. This is the whole day on the S, right here to right here. There's no trade zone except for this one purple arrow right here. It was no arrows, no trade zone the whole day. The NQ, of course, gave some opportunity. Look at how long it stayed in the overbought right here. That's what all those little red arrows are saying. You're in a downtrend and we're overbought. Until the downtrend changed and it came out of the overbought right here. It changed to flat. Let's hit that button and that button. And go all the way back here. All right, all the way back here. Now, on the NQ, our first trade in here on the NQ was a break even. Our next trade is where we got the goal for the day, right here, this purple arrow. We got 30 ticks profit right there. Then we had another break even, and then we had another trade here. We got 12 ticks that brought us to 42. Here we had 8 ticks that got us to 50. And here we had another 30 tick trade that got us to 80. And that was actually during, I wasn't really doing a lesson plan, but I was walking through everything that was happening at that time, drawing these lines and saying, from the old school stuff to the new school stuff, showing the old slingshot and the new slingshot. But that happened as I was going through that. So we were able to watch that happening and see the whole thing. I didn't get any of these black arrows, so we took another break even trade over here on the blue, and I think that was it. So during the break, it's just given a couple of purple arrows here. I think the markets have really cooled after the mornings, after the beginning of the morning, first hour or so. Markets really settled in and started going sideways. So it is now 1:03. So I'm going to start up the live, not the live stream. I'm going to start up YouTube on my end, and then I'll be able to see any questions that come in over there. Okay. So anybody that is watching on YouTube, if you have any questions, you just type them in there on the YouTube channel. Okay. and we'll just trade what comes up here. All right. I never did go and see all these things, but I did set this one. This is the alert that I set. I think I set it at the end of the session this morning. And what I was doing it for was so you could see over here how it shows the bold print right there, and also how it shows on my phone when it comes up on my phone. And it's mixed up with all this table stuff. Right, that is, it is not triggered on my phone yet. Maybe I didn't do that one right. But anyway. Oh, you know what? I don't have it set on my phone. That's why it's not triggering on my phone. I gotta set it on my phone. Anyway, we have a green arrow here that's got to put in a higher swing before we can trade in that direction. Again, we have a weekly trading zone that's right up above that's been there all day long. I don't know what we're going to get with that. All right, I don't know that we're going to get another trade. I don't think we're going to get another trade because by the time we do, it'd probably be too close to the zone to take the trade. Everything was looking really weak to me this morning when we're looking at the bigger picture stuff. We looked at this yesterday. Remember yesterday, I was using this for my volatility index, the NIX. That's Michael's volatility index. When I was thinking we had CPI coming out today, we had the European CPI come out, and that happened right here. And it did drop when European CPI came out. It dropped right down to here to this swing low right here. Bounced back off it. And last night in the partners meeting, we were in here in the partners meeting last night talking about it pulling back up and hitting the BBC and the weekly trading zone and bouncing off of that. Now, because it went sideways so long last night, getting into the news that came out when the European Open happened, the BBC dropped down quite a bit. So it got above the BBC, but it stopped right here at the weekly trading zone and pushed back down below it. And I was saying earlier, if we get into this box, it should be a free fall down to here. And this is the thing I was talking about yesterday. This was the line, the volatility index that I was using yesterday that I created. It's my VIX. But I was thinking we had CPI coming out today. We didn't have any big news event come out to move the markets, but I still think that this is where it's going to go. Eventually, I think it's going to get down to this weekly trading zone. We don't have any big news coming out next week until Thursday. So I don't know what's gonna happen with this, but anyway, we're kind of stuck here at the BBC going sideways. I don't know. It's 1 o'clock. We still have 4 hours left in the markets. I don't know what it's going to do at the end of the session today. We're not at the end of the month or at the middle of the month. There's really no reason for anything to happen. But when it does, it's got to retrace some of these gains that it's had, and right, and there's a good spot. And if you do the full retracement, that stuff that I did, I think I did it yesterday when Dwayne and I were talking, or I might have done it during the partners meeting last night. I can't remember when I did it, but if you do the big move right here, the retracement of this big move, let's back this out a little bit. When Dwayne's looking at this on the daily chart, you can kind of get a glimpse of the daily by looking at the whole thing like this, right? Backing it out and seeing the whole thing like this. But if you look at this piece right here, we were talking about it getting down to 5,200 yesterday. I mean, not 5,200 right now, but from a daily chart, eventually getting down to 5,200. And if you draw this on here, and let me see if I can do anything with this color. The middle one is one that I really want to jump out. Okay, and I really want it to be thick. I don't know. Can I make it thick? I guess I can't make them individually thick. But right here that's about 5,200, and that's what Dwayne was talking about from a daily perspective. It's looking about the same thing, and that is 50% retracement of this whole move. So that would work out really well with everything else that the charts are suggesting it's going to do. The charts are suggesting it. Okay, we're not suggesting it. The charts are suggesting it. We're just confirming, or actually interpreting what the charts are suggesting. In our opinion. All right, so we had a trade set up here. We're going sideways here, going sideways here, going sideways here, and going sideways here. In our opinion, based on our vast amount of self-inflicted education. We've been doing this for a very long time, and we recognize patterns when they happen. So the markets are really slow. It doesn't look like we're going to get any kind of a trade here. Let's go look at the other things. Look at Bitcoin first. Okay, Bitcoin's getting a little bit of a bump here, and if it gets up above this level, I was saying this yesterday, if it gets up above this level, we could be putting in new highs. All right. I don't know how long it's going to take. It looks like probably a week, maybe 3 days, but I'm thinking a week. If it gets up above this level, could be new highs coming, and then the new high that I'm thinking is going to be up here. Okay. Again, that's just based on price action stuff. But so far, Bitcoin has been doing pretty much everything that we would expect it to do price action wise. You know, all this stuff that it did over here, we started calling all this stuff back in December. And from December, it's been pretty consistently doing what we expected it to do. Just based on normal price action patterns. Okay. Go back here, we'll look at stuff in here. Now we had one of the fellows this morning, who, Joe, I don't even know if you're in here right now. I'm not sure if you're in here. Let me scroll up and see in the J's. H-I-J. Okay, Joe's not in here right now. But he was asking how this looks on the 15 range, and this is what it looks like on the 15 range MQ. All right, I was looking at it this morning on the XOM, which is Exxon stock, because we have one of our guys that likes to check Exxon stock once a day. And this is his once a day right here. He's only going long with the Exxon stock. He's not going short. So he likes to buy when it says buy once a day. And so right here, his buy said 1846. Right up here, 1846 was the buy point. Target 1 was 1858. Target 2 was 19.3. So it's almost up to target 2 right now. It got right through target 1, almost up to target 2. Almost a whole dollar on our morning session. Does anybody want to see anything else? Does anybody have any questions about anything? I know this is TV trades. I know some of you guys, you know that TV trades is the free part of it is stopping today. If you are going to continue, please do it today. All right, you can go out here to the website today, wherever that website is. I think it's this one. Go out here to the website today, and choose one of these, and you still get a 3-day trial starting today. You get 3 more days of the trial if you start today, but you got to do this today. All right, it'll be easier on me if you do that today, because then I won't have to delete and add you back when you come back in 3 days or 5 days or whatever it is. But you still get, if you do it right now, you still get an extra 3 days trial, and you won't get knocked out tomorrow morning. If you have any trouble with this, because we're having people that were having issues when they click this, Stripe apparently is having issues too. If you have any trouble with that, just send an email to support@targetretrades.com, support@targetretrades.com, and I'll help you out. There's another way you can do this. You don't have to do it through here. I have another provider that you can use. It's Shopify. I have a Shopify store you can do it through. Okay. So I want to point that out to anybody that's watching in here right now that is interested. Okay. So let's go back here now. This, when did we create that? It was a green arrow long on the NQ15 range. We created that this morning, I thought. It was right here. Green arrow long on the NQ15 range. And that worked out to some degree. Now, the timing of the alert right here, right? This is the one that had the arrow, but that's at 13:02:40. The next bar is when the alert gets triggered. The beginning of the next bar is when the alert gets triggered. And that was at 13:03:13. So it finally got over here 1 second later at 13:03:14. It took 1 second for it to go from trigger to display. So that's not too bad of a delay there. All right, we almost have a trade over here on the YM. It's oversold. If it gave us anything right now, it would be a black arrow, but it's not going to be any kind of black arrow that I want to take. You guys may remember me talking about the black arrows, and I don't know if I talked about it here, if I talked about it in the morning, the nights that we have partners meetings, everything gets all jumbled up for me because we go over a bunch of stuff in the partners meetings too. But what I was talking about, what I am talking about right now, is when you get a pullback like this. When you get a pullback like this, you have to look at the leg length of the thing that got you into that pullback, right? How deep is that pullback? And is it this leg length right here or this leg length down here? For argument's sake, you could use this leg length right here and say, this is the leg length. So 50% of that leg length is right there. Okay, this leg length, 50% of that leg length is going to be like right about there. So this is the pullback right here that I really want to see. The one that comes down and hits the BBC and it pops out of the oversold. That's what I really want to see. Okay. Now, if I erase those drawings and we actually put the 50 thing on here, and you can see that that midpoint is right here, right at the BBC. Now, if it pulled back there, that would be an attractive trade. If we got a blue arrow here that didn't pull back the full 50%, but hit the ribbon and you came out of the oversold, then that would be a really attractive trade to me. Okay, I mean they're all good, but that would be even better. So it's not losing as much momentum on the pullback. You guys understand that? See that? Why it's important. Okay, the green arrows are going to pull back closer to the 50% mark of the move. Okay, the green arrows are going to do that. The black arrows should not be anywhere near 50%. And again, the thing with the black arrows, if you get one that pulls back like this, where the distance to the swing high is so tiny, you don't want to take that. And the NQ, especially right here, you're risking 20 ticks on this NQ trade for it to go 4 or something like that, right? If you got filled exactly at 39.25, it was going up to 3 ticks. I'm sorry, 39.25. I'm sorry, 7 ticks up to there. Right? You see, it got rejected right there at the swing high. It got rejected and came back down. This green arrow down here is a much more attractive trade, right? Because you expect it's going to go up to here. And if you look at the math on that, you do the math on that. Let's do the same thing that I just did. See, that one over there is starting to look better that I was just looking at on the other side on the YM. But you look at the retracement on this, see, it's not anywhere near 50% retracement. That's what makes this green arrow a better one to me. Right? So using that same logic, we're back over here now. Okay, what I just told you about this one. Now we're hitting the ribbon right here. Okay, we're hitting the ribbon, but we have not hit the black line in the ribbon. So it means, I think we're hitting the ribbon. If we are in fact touching the ribbon, I can't see because the white arrow is there. But if we are in fact touching the ribbon, it gives us an up close and pulls out of the oversold. It's going to give us a blue arrow. It's not going to give a purple arrow because the outer band's not blue. But it gives us a blue arrow. But if it isn't actually hitting the ribbon, it'll be a black arrow. This is a black arrow that I would take. But it's got to come out of the oversold to give us any kind of an arrow. All right. If it's hitting the ribbon, and we'll know if it yeah, there it is right there. That's what I was saying. We'll know because it's going to give us a blue arrow. Here it is, right? So this is a blue arrow that is attractive to me. Attractive for a couple of reasons. The high of the day and the swing high are both right here, right? It's 78. So it's probably going to try to get back up there. It did not go all the way back. It did not pull all the way back down to the 50% retracement. It did not hit the black line. We have this much room to the swing high, 78. It's right there. 78 is right there. So there's plenty of room to get the stop to break even and take some good profit in the trade. Okay, 12 ticks in profit before it finds the first area of resistance. Does that make sense? All right. So after 4 ticks in profit, we're going to bump the stop to break even. 4 ticks in profit, we're going to bump the stop to break even. Come on, push up there. And, you know, I know people are watching out on YouTube and we can't see who's watching on YouTube. You know, in the other room, we can see who's watching. And, you know, if you're watching me for the first time and you haven't been trading with me for years and years, like everybody else, you know, like not everybody else, but most of the other people, you know, so far this year, following the rules that I follow, well, in the room in the morning, we're at $570,102. That one stopped out. We're at $570,102. Quitting when we get the goal for the day, following our 24/20 blueprint, we've had to work 33.41 hours so far this year. And doing that, we're up $201,165. Okay, just if you're listening to me for the first time, that spreadsheet that I just showed you goes back over 10 years. Now this one right here, it didn't give us 4 ticks in profit. If it would have given us 4 ticks in profit, we would have been our stop would have gone to break even. It did not give us what we were looking for on that. It doesn't mean it's not going to. It just means it came and pulled back to the ribbon. But now it's pulled back the 50% mark right here. Okay, let's draw that out again for you. If it goes through that 50%, then it's getting to be ugly. Right, so the 50 is right here. Okay. And I just got a bunch of alerts that said possible sell on the SPY. So I don't know what the SPY is looking like right now, but we can go take a look at that. We're about to get it in NQ. It's going to pull back and give us a shorting opportunity there on the NQ. Let me slide that over. On the NQ, I want that to pull back up. There's the green arrow. Now you can't take the green arrow because the blue arrow didn't put it in a higher swing. Okay, so you can just ignore that for right now. But what I wanted to look at was over here. I want to look at the SPY. I don't know what time frame it was on given that alert. I think it was probably on either a 5-minute or a 30-minute. Well, it shouldn't be firing the alert until it's bar close. So it's probably not the 5-minute, it's the 30-minute. 30-minute looks like it'd be kind of late, but that alert. Yeah, it was the alert back here on the SPY, back here. Same the short on the SPY. And if that's given the short, then everything else is probably going to drop too. All that stuff that I was thinking eventually is going to happen today could be starting now. So we stopped out on this one, sadly. Stop outs happen. And it's hit the 50%. And bang, it just hit that 50% mark. Okay, we'll see what it does from here. I don't know that it's going to go up. Everything else is starting to go down. But that was an easy trade to take. I had complete confidence in that trade. It didn't work out this time, but that's okay. That happens. It happens. You don't win every single trade. Nobody does. Well, nobody that's honest does. We just about have a trade here on the NQ. Just about on the NQ. We're in the overbought, but we changed direction, so we want to make sure we hit the ribbon here. We want to take a trade off the ribbon. Okay. All right, it is 1:23, so we only have about 7 minutes left. Then Hal, I don't know if you're out here right now. I will send you a link to our meeting that we have coming up. Well, does anybody have any questions? Anybody? Anyone? Waiting on the NQ. It's like paint there. So this hit the 50% exactly, and it's bouncing off. So far. The Russell could have a trade here. I wasn't even watching that little guy. Down close on the Russell. It's not going to have a trade here. It's going to have an up close and a down close. Okay, it's not going to have a trade here. Yeah, it's not going to have a trade here because we're not in the overbought, right? We're hitting the ribbon, but we're not in the overbought. Right? Now over here on the NQ, we're in the overbought and we're in the ribbon and we're not in the black. The outer band is white, so the only possibility is either no arrow because you don't come out of the overbought, or a blue arrow right now if you do come out of the overbought. That's what the NQ is looking like. If it goes up a little bit more and it hits the black line, then the possibility is no arrow if it doesn't come out of the overbought, or a green arrow. Okay, so 63.25 down to 19.25 right now is what you're looking at on the NQ. Looks like this right here. Okay, now this one, because it has not hit the black line, it doesn't matter if it comes out of the overbought. It's a trade, even if it doesn't come out of the overbought, it's a valid trade. If the outer band were purple, there's a chance. I mean, if the outer band were red, there's a chance it could be a purple arrow. But alas, it is not. So the only possibility is no arrow or a blue arrow on this. Okay, and blue's the highest probability. So that one over there did not give us, it almost gave us enough to get the stop to break even. 64 up to 68. If I didn't have slippage on that, I did get some slippage. If I didn't get any slippage, then it would bump the stop to break even. It wouldn't have stopped out on that. This one has to stay below 22.50. So it just went to 22.75. The DOM right now is looking like it's going to go up a little bit more. And if it hits the black line, then I can cancel the order because we're going to have to wait. Okay. Oops. I might have bumped that up a little too far. All right. Well, anyway, it's a blue arrow. We didn't hit the black line. It's a blue arrow. It's a valid trade. My stop goes to break even after he takes some profit. Okay. And we got a break even. That was a long wait for a break even trade. I could have locked in 6 or 8 ticks on that, but I didn't. I was given a little room. The Russell could give us a similar trade right now. It's got a high here of 4.0. 4.0. So what you do on the Russell is sell 3.2. 8 ticks away from the top of the bar is what you want to sell. There's no guarantee that this is going to be a trade, though. If it does not put, because you see we've hit the black line. This one was definitely going to be a trade if you got a down close. This one, not so much, because it could close down and not come out of the overbought. All right, that's not a valid trade by itself. You got to have the arrow with that one because we hit the black line. Every time you hit the black line, you got to come out of the overbought if you were sold. Okay. Every time you hit the black line. So if we get it down closed on this and it gives us a green arrow, it didn't. See, we didn't come out of the overbought, so that's not a valid trade. If I'd have left my sell stop limit order on right now, I'd be in it. And it might work out, but I'd be in it and knowing it's not a valid trade. Okay. All right. Well, I think that's going to be it, guys. The markets are really, really slow. So we had that one break even, we had that one stop out, and we had almost a trade there. If you haven't taken a free trial with us and you want to, go here to mytradingIQ.com, click on the purple button right here. There's no credit card required for the trial. Click on the purple button, and you will be sent to this page. Not that page. This page. You'll be sent to this page where all we ask for is your name, your email, your phone number, and down here at the bottom, if you have Ninja, give us your machine ID. If you have TradingView, give us your login ID. If you have both, give us both. All right, and we'll get your indicator set up for you and indicating for the entire week of your trial. All right, that's all I got. With that, I can pass it back out to the fabulous Phoenix, Arizona, and Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready. It looks like you are.
Yep. Recap of the morning session.
Today, it took him 9 minutes and 3 trades to get to $2,550.
Good job.
Thank you.
Okay, guys, we left off with gold, which is still trying to climb, but the issue is blue and climbing is now directly above price. Step line crossed, and the step line has hooked up. So you got a double top right here, plus you got blue and climbing. That's resistance times 2, or you could even call it 3. So what happens here is important. If we get through this area, then our next area for resistance is up at 2423.7. However, if we find resistance here, there's potential support here, here, here. The BBC, pullback holds more often than not. Silver, the big mover of the day. Here's where we opened last night and immediately ran up to the long target. And then we dropped, sold off a little bit, ran back to the target again, pulled back to the BBC, the pullback held. You only need 2 pennies in silver to get your goal for the day. But from 29.96 to 30.96, that's $5,000 per contract traded. And we've traded all the way up to 31.31. A $1 move. The price of silver is worth $5,000 per contract traded. And the euro. Here's where we opened last night, below the BBC with red and falling, and it took us right down to the short target. And the zone. Support sends us looking for resistance. Resistance sends us looking for support. And this low was defined 2 days ago, right here. This is Wednesday. Wednesdays, this retracement low became today's session low. And support will always send the market looking for resistance. And where did it find resistance? At these highs from yesterday. Now the step line has crossed, so the most likely thing to happen is for price to pull back to the VVC, pull back holds, then we'll look to trade to the upside. If the pullback doesn't hold, that will put us below the highest weekly zone. The only zone that we're above is the euro at the moment. ES is below the highest weekly zone. The Dow, barely. Russell still has another zone way overhead. NQ, that's the highest zone, and that's where we are. Crude, Still has 2 more zones overhead. And 80 up to 80.40, that would be a $400 per contract trade. Gold still has quite a ways to go to get to the highest weekly zone, but we're up against blue and climbing. The most likely thing to happen is a retracement back to the BBC. Just looked at silver, we just looked at the euro, and a last look at the daily, where we have one of the tiniest daily dojis probably ever see. I mean, it's barely a speck, but that is the Friday session for the S&P. To become a member, go to mytradingiq.com. If you have questions, call us at 949-42-EMINI or send us an email, support@cfrn.net. As a passport holder, you get 2 hours of live training every trading day. Private one-on-one mentoring, no additional charge. Strategy you learn and the indicators you own are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETFs. Price flows the same across all markets and all time frames. Support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. As a passport holder, you get the Logic 247 alerts, the concierge trade alerts, the weekly trading zones, and you're able to attend the members-only workshop every Thursday night. Everything a trader needs, all under one roof, one low price. mytradingiq.com. Let's wrap this week up with our good word for the day. Broken arrows. Psalm 127, verse 4. As arrows are in the hand of a mighty man, so are children of the youth. Children are like arrows. They must be aimed in the right direction. When they're aimed in the wrong direction, they may become involved in harmful habits or destructive lifestyles. And as long as we jeer at or judge them, they will never feel comfortable turning to us for help as they go through life. Broken arrows come in all forms. Pain isn't prejudiced. It spares no age group, cultural background, or social strata. So, what's the answer? Let the strong bear the infirmities of the weak. Romans 15:1. Jesus had compassion on them and healed their sick. Matthew 14:14. Compassion is the mother of miracles. When the disciples thought they would die in the storm, they didn't challenge Christ's power, they challenged his compassion. In Mark 4:38, they said, "Carest thou not that we perish?" Except they didn't say it in the King's English. That hadn't been invented yet. It was probably closer to, "Hey dude, could you give us a hand?" Where there is no compassion, there will be no miracle. Only when you're moved by someone's pain rather than turned off by their symptoms can you bring healing to them. One author writes, "We can build all the churches we want, but if people cannot find a loving voice within our hallowed halls, they will pass through unaltered by our cliches and religious rhetoric." Church is not a club for the well, but a hospital for those needing to be healed and set free. You don't have to like everything about the people you're called to minister to, but you do have to love them because God does. We have been called together. Gather up those the world has thrown away because they matter to God. In Malachi 3:17, it says, "They shall be mine, says the Lord of hosts, on the day that I make them my jewels." And that's our good word for the day and for the week. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy, with His grace, and I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.